Hey everybody, this is Jose here. We are a little less than a minute before we start the session today. So as we always do, it would be great if you could just type a quick hello in the chat box. So that way we know that we are well connected, that you hear my voice and we can start on time. So please be kind and say hello or just say, I hear you, Jose, something like that. Thank you so much. That's wonderful. Thank you, guys. Yep. So just like 15 seconds to go and we begin, okay? Very good. So we just reached 0 in our countdown. So it's time to maximize the welcome slide so we can begin our session. So hello everybody, how are you my friends? A special day today, isn't it? Thursday, right in front of a long weekend, 3-day weekend. You know that options traders, we normally get quite excited about that because obviously we can sell options, collect the premium, and have 1 day less of risk while time decays the value of those options. So that's why I'm calling it a special day, a special trading day. Okay, putting on the side, of course, for the ones of you celebrating Easter, happy Easter, everybody. Of course, that's also an important event. But anyway, back to trading. So welcome to the session today. Today is 18th of April, 2018. We are getting together to do some longer term trading. So the king and the queen of the session are going to be our calls and puts. We're going to be doing stuff with options. We will, if we have time, we'll look as well at the currency markets. But initially we will begin the session with options plays. Okay, options plays for directional trading, as well as options plays for non-directional trading as well. I would like to exploit both types of scenarios. Okay. But as we always do as well, before we start the session, we need to go over a disclaimer, so I'll do it quickly. Let's go for it. The following videos, clips, demonstrations are for educational and instructional purposes only. Tradictive provides these videos purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through the demonstration do not indicate in any way the results you may receive when using our products. Good. So we got it. I am loading a TradeStation on my other computer screen. So we're going to be ready in a minute. But also, as I've done in the past, I would like to start the day with an email we just received a few hours ago. An email from Supply and Demand Trader. I don't know if you are with us today. I would expect you to be around. Here you are. I can see you with your hello message. Thanks for that email, Supply and Demand Trader. Really, it's so great not only to receive a kind email because you are actually kind with your words, so we appreciate that. But beyond the kindness, it's great to see you guys putting the time, the effort, and the discipline into executing those trades that we plan together, and see you and your accounts grow. Okay, and when you share that with us, well, it's very simple. You make our day. Okay, so I would like to start the day with this little email. Credit to AutoUFOs, that's the subject. And Supply and Demand Trader says, Hi Jose, I've taken your last 4 credit spreads identified by AutoUFOs in your meetup sessions and they have all worked, which is great. That's the beauty of selling options. You have a higher probability of profit. It doesn't mean all trades are going to be profitable, but 4 out of 4, it's certainly something that makes us happy. Since our long-term meetup, the UAL credit spread expired like Friday, so that was a full profit. And I remember you talked about that before. The Tesla Iron Condor expired today, worthless, so full profit on that. And also the CI from the session last week, you sold it this Monday for 45 cents, and you bought it back less than 24 hours later for a 75% profit. That one here, you did apply a little bit more advanced trade management, isn't it? You were using the UFOs on your own, meaning that not together during the sessions. You were using the UFOs on your own, which allowed you to do a little bit of trade management there based on what we read here. Okay, so you were in the trade for little amount of time and you collected 75% of the profit of what the trade could have paid you in the whole length, but you did it in 1 day, so which was a reasonable action, actually a very smart action for you to take and close the trade at the time. Thank you, Jose, for this. Loving the Auto UFO, loving your emails, my friend. Again, I think it's a great example as well for everybody here, because some of you, of course, I would expect you to have great experience in trading, but also some of you may be in the learning stages. And if you are in the learning stages, something, and I've said that before, something that is important for you to develop to grow as a professional of the markets is confidence. But you cannot develop confidence unless you practice, and you cannot practice unless you have some, let's call it, initial confidence that allow you to begin the practice, right? So that's why I think that the teamwork that we do all together here is great. And again, this email, it's important for us, and again, very appreciated, Supply and Demand Trader. But also I believe, and this is the reason why I'm sharing the email with you guys, I believe that this email is also probably helping some of you that may be in those initial stages to get you do that first step, whatever that first step is. It could be take the trades in a paper money account, or take the trades with one contract only, or whatever you define as your first step. But at least begin the practice that leads to developing skill, that leads to developing experience, and finally the experience builds up that final professional confidence that you need to excel. Okay, so good job. Brian Binotti, nice to see you. Took both UAL and Tesla as well. Great profits. Nice. Very, very nice. Supply and Demand Trader, I also used the AutoUFO tool on Monday to check the trade was still valid before taking it. Okay, got it. So you watched the session recorded. Got it. And yeah, so then you just turn on your UFOs on your own to validate the trade. So way to do it, guys. Way to do it, because again, I understand that some of you, and that's ideal, right? When we get together at the same time, that's ideal. But sometimes, based on your busy schedules or other responsibilities that may not even be related to work, maybe you have a couple of kids at home that you are taking care of, and that takes a lot of time, right? And maybe even exhaustion, and maybe even it leaves you with no patience to trade, right? So just using a little humor here, but anyway, so a good way to do it as well is to watch the recorded sessions over the weekend, even though it's more ideal to be live, and then execute those trades by you rerunning AutoUFOs on your own and validating the trade. Okay, good. Pedro, today we are not going to be using CL, if you don't mind, because today is a longer term session, so I'm going to be doing options on equities. Okay, so the CL is something that I would have be glad to use in the short term sessions, but today it would not really fit our plan. Okay, so just keep that in mind. Mr. Ed, hi all, my Tesla didn't get filled, I took the UAL. Okay, well, and that again, and thanks for sharing, Mr. Ed. This is also the life of a trader. Okay, sometimes you bid, or in this case, I should say, you ask a specific amount of premium when you're selling your Iron Condor or your spread, and sometimes we may be asking a couple of extra cents, and that may be the reason for not being filled. So this also comes back to the experience. Okay, you will develop through time a greater understanding on how you get filled when you trade different products. You may notice things such as when I do options on the SPY, I get filled very, very easily, or maybe when I do options on the Dow Jones ETF, the diamonds, maybe I get filled more not so easily, right? Or maybe when I do options on Facebook, I got an easy time to get filled, but when I do options maybe on Tesla, maybe a little trickier. So this again comes through experience. Okay, and by the way, that experience, that one, you need to do real accounts, because with paper money, depending on the platform you use, you will always get filled. Or for example, with TradeStation, when you trade paper money with TradeStation, you only get filled at the market price, so you cannot shave, you cannot try to get a better price, but you always get filled. That's the good thing. The bad thing is that sometimes is a worse price compared to what you get in the real market conditions. Where when you do other platforms, for example, I'm just gonna point at Thinkorswim, TOS, which is the professional platform of TD Ameritrade, where when you use TOS, you will normally get filled at the midpoint, where sometimes it's a little too optimistic depending on the market you trade. So, again, the experience I'm talking about of how you get filled has a lot to do with the real trades and getting to know the stocks you trade. And this, again, it depends on how active you are. It may take you 6 months, it may take you a year to get to a point where you know very well, let's say the 20 to 50 stocks you have been trading throughout the year, you know them very well, and you get to understand where's the liquidity and and so on. So the fact that you didn't get filled, Mr. Ed, obviously not ideal, but at the same time, a great job putting the order in. Just to get the experience in, and now next time you do the trade with Tesla, you may shave a little less, or try to adjust a little bit more to get the feel the next time. Okay. Supply and demand trader, one comment here. Glad to hear you're attacking them. To Brian, yes, these AutoUFOs trades are nice. Teamwork, guys, teamwork, love it. Orlando, hey Jose, glad to be here today. Thank you for your time and teaching. My pleasure, guys. As you guys know. If you have been with me in these sessions for a while, I love this and certainly love spending time trading, and, better than doing it myself on my own. I love it to do it in the group. Okay. So this is super fun for me, guys. Okay. No need to thank me for that. It's my pleasure, and it's fun. So anyway, let's begin. So I've been running the scanners before the session started. So I got my trade station ready here. I got directionally long trades, directionally shorts, neutral long, neutral short, and non-directional. Okay. Normally, I always begin from top to bottom, because normally we always have less directional opportunities than non-directional opportunities or neutral. That's normally the case. Okay. So that's why I do that. But this weekend, or I should say today, since we have a long weekend, I really don't want to miss on trades that potentially could be good candidates for us to sell premium, just because we have this special event of a 3-day weekend in front of us. If we were to find opportunities where we could use weekly options that expire next Friday, and we enter the trades today, and then next thing you know, the market closes today and doesn't reopen until Monday, that is leaving us with 3 days, Friday, Saturday, Sunday, 3 full days of time decay with no market risk, because there is no market movement over the 3-day weekend. Right? So I don't want to miss on that. So instead of beginning looking for directionally long or directionally short opportunities, I want to start from the complete opposite side of my scans here, which is the purely non-directional trades. Okay, so we have Abbott, all these here. We got 15 stocks that potentially could be good candidates. Okay. Now, to do this, we will also need to follow a series of rules that I am just flashing here very quickly. I'll be going back and forth, between those rules. Some of you that have been with us for a while, you've seen this before, so this is nothing new. If this is the first time you see this, I would like to ask you please to go ahead and use our YouTube channel, look at the playlist, and look at the recordings where we have been doing sharpening for options. You got 7 recordings. They are tagged as sharpening options number 1, option number 2, all the way to options number 7. So I'd like to ask you to go ahead and watch those. So we kind of speak the same language, okay? Because obviously I will be pointing at the rules. I will not have time to explain the rules again, because it's all explained and it's all recorded. Okay, so keep that in mind if you are joining us since only a few sessions ago. Okay, so now when looking at the non-directional trades, the other thing I'm going to need here, let me get it. Okay, so I have my trading view here with my UFOs. We can also, you could certainly go ahead and load your symbols in here. For example, Tesla, right? And load the UFOs in here, and here are your zones. Okay, you could certainly do that. But the reason why I'm opening a browser really is not because of the trading view at the moment. It's because I want to have access to a website that gives me information about earning plays. I should say earning dates. And in this case, I'm going to use briefing.com. There are more websites, and this would be your choice. And what I want to do is basically this whole list, okay, of 15 stocks that have been filtered in a way where options are highly priced. Okay, there is a lot of premium built in those options. I would like to find out if the reason is because of earnings, because if the earnings are the reason for that, I may not be able to take the trade, because earnings are also the source of potential gaps. So, for example, Abbott reported earnings yesterday on the 17th. So, since TradeStation provides end of the market data for options, okay, Abbott, okay, is showing a great level of premium for the options, where the reality probably is not the case anymore. The only thing is that TradeStation doesn't know until the end of today. So if I look at Abbott, just to show you guys, so you get to see what I'm doing here. Okay, so I'm just gonna load Abbott, and also I want to load an option chain. Okay, so I'm gonna look at the option chain. So if I look at Abbott on my chart and I was to load the implied volatility, which represents the price of the options. So, TradeStation understands that the pricing of those options is 50.19. So TradeStation understands that the volatility built in those options is out of a 50% move. So in other words, people are buying options at a rate that implies that they expect the stock to move 50% in 1 year. That's what this number means, okay? Why? Because, this stock was about to report earnings and all those things, and therefore people are willing to pay a lot of money for those options, expecting a very big move to happen at a rate of 50% a year, okay? Now, this is true, okay? But it's market data updated at yesterday dates, because if you look at today's date, just wait a second here, guys. I just hit on the wrong button. So if you look at the option chain, notice what's happening real time for the options that expire in the following expiration date. This is more pointing like at 30%, even though our TradeStation is still pointing at 50. In the real time option chain, you can see it's more 30s and 20s. The 160, of course, you have to ignore that because this is the option that expired today. With 0 days to go, you simply ignore that, okay? You simply ignore that. But long story short, because TradeStation is updated values end of the day, our scanner identified Abbott as a valid candidate for us to do a non-directional trade, where the fact is that it's not. Okay, and it's not because earnings were reported yesterday and TradeStation has not updated the values yet. If TradeStation was to update, this would be a value of 30 plus or 20 plus, which is not high premium any longer. So that's one of the reasons why I'm going to be typing those symbols here in briefing.com if you have not seen me do that before. So I'm going to go for the next one, which is AMGN. Okay, and it's going to be loading here in just a sec. And this one has an earnings date of May 7. Okay, so AMGN could be a candidate. Okay, could be a candidate. And what I'm going to do is I'm going to make a list of the stocks that could be potential candidates. I'm just going to write them down here. So AMGN. What about AMGN? AMGN. Oh, this is very funny. The same thing happened, where when I type on this website, it gets my typing backwards. April 30, that would be valid as well. Okay, April 30, that would be valid as well. BA, okay, that would be Boeing. Boeing has April 24. April 24 would not be valid because the next Friday will be 26. Okay, so BA would not work. Okay, so AMGN, but we will skip BA. What about BG? And again, I'm going over the process manually, so you guys can replicate this process any other day. When we are not doing it together, you guys can still do it, so you see me do it, okay? So BG is valid. Sorry for that, guys. I had to have a sip. So BG is valid with May 8. Then we have CI. CI, that would be May 2nd. That's valid. Anything that is above and beyond April 26, I'm calling it valid at first. EA, it's valid. What else do we have? Facebook, FB. That one is April 24, so that one will not work. Okay, that one will not work. So we have CIEA, but Facebook would not work. What else do we have? LUV. So LUV, April 25 will not work because it's before April 26. 3M, MMM. Yes, Brian, we are skipping BA because earnings is too close, and we're going to be using an expiration date, which is April 26, which is next Friday, and we have the earnings in between. The earnings are source of gaps, and if we're going to be doing non-directional, but you get a gap against you, well, that gap is likely to hurt. Okay, so we want to avoid the gap, and therefore we just keep stocks with earning dates that happen before the expiration date, being next Friday. Okay, so MMM, we're not going to use it either. TMUS, T, be able to use it. URI, that stock reported earnings yesterday on the 17th, so this is the same. We can take a look. So basically, for pure non-directional trading, we are left with 2, 4, 6 stocks, okay? And therefore, it is now time to go ahead and take a look at the chart to see if we have any setup that give us what we need so we can plan on a non-directional trade, okay? You also know that when being non-directional, and you've seen me do that before, when being purely non-directional, especially when using a very, very short expiration date, my goal is to use the shortest expiration date as possible, okay? You've seen me use the 60-minute time frame, and you know, you could certainly use the daily time frame, but probably your UFOs are going to end up too far away, and therefore you will end up not being paid enough, okay? And if you are not paid enough, well, then it's a problem, because now the risk and the reward of the trade may not justify, right? So I rather begin the plan of the trade with a 60-minute time frame, okay? But I have to say that I'm not liking too much that 45, okay? Values under 50 really don't make me feel too good. So let's take a look at pre and post market to see if we're above 45. It's 43, okay? So you can tell that the nature of this particular stock, Western Digital, is not a nature of a stock that I would trust so much. And what I mean by that is that it seems, based on the stats we just collected, that the way the big players that trade that stock are trading that stock is in a way where they tend to change their mind and cancel their orders. And therefore, you know, what we have on the screen could certainly be useful. The green and the red, you know, flying saucers could certainly be useful, but in this case, less useful than normal because of such a low percentage, okay? So the algo is doing the same thing, but the percentage is low. There is one simple explanation, okay? Institutions cancel the unfilled orders on that stock. Why? No idea, okay? We don't know why institutions do what they do, but we could certainly identify what they do thanks to the tools and the technology, okay? So it's important to use AutoUFOs not only to plan the trades, but also to understand the products that you trade. Let's say you never traded crude oil, and you've been trading the euro 5 years, and now you want to apply your methodology to crude oil. Well, you don't know what to expect. So thanks to the stats, you have a better understanding of what to expect, okay? So what about EA? If I look at EA, now we have a greater percentage, okay? And it's the same algo, it's the same tool, it's the same UFOs, it's the same everything, but now we have a much, much better value. And why is that? Well, because it seems that those institutions are not removing the orders so easily any longer, okay? They are not canceling the orders. Maybe that stock is less speculative, or institutions based on fundamentals, they believe in the long term is going to be a better bet or whatever, and they don't cancel the orders. I don't know why, again, but I can see you know, what they're doing thanks to the stats. So I'm going to look at pre and post market, because sometimes as well institutions are very heavy on pre and post market in certain stocks. Sometimes they are very, very light on pre and post market. It depends on the stock and the institutions. So I'm gonna look at the statistics, and if my 53 becomes greater than 53, it became 47. So then it means institutions are not too heavy. Okay, so institutions are not too heavy on pre and post market. So I'm just gonna ignore pre and post market and focus only on the regular trading time. Okay, so what do we have? What do we have? Well, if I zoom in a little bit here, you can see that we have actually it's 3 red UFOs above price. So I think it would be fair for me to say that Electronic Arts is not likely to reach 98 anytime soon, because every time EA tries to go up, it's going to hit a pile of unfilled orders and potentially go back down, or at least stay there for a while and spend some time. And that's what we want when we do options, because we let them decay, right? And then on the other hand, we have a green UFO, dark green UFO, located at 84, 82. And I could have the same statement, which is I would not expect EA to go below 82, 86 anytime soon. It could certainly go, but it's not likely to happen tomorrow or Monday or Tuesday, just because of a pure distance between current price and 82, and also because of the fact that we have the green UFO. Okay, so and price is in the middle, which is a nice setup for me to build an iron condor. Okay, now of course I have some requests, some requirements when it comes to premium, etc., which I need to check before I get too excited. Okay, but before that, I am looking at FB, or you are looking at too few bars. Well, at the moment, if I'm not mistaken, I am loading 1,500 bars. Let me see if that's correct. Yes, I am loading 1,500 bars. So if out of 1,500 bars I got 40+%, well, realistically it's not looking too good, right? Yeah, maybe after 3,000 bars I got 50, but at the same time, already 1,000+ bars took place, and I didn't really enjoy an edge trading in that particular case with WDC. Okay, and it's just because of how institutions act in that stock for whatever reason that I don't know. The fact is that the stats prove to us that there is a tendency for orders to not to be left but be cancelled instead. And if I had only one stock, maybe I would give the stock another chance, but since I got more, so I will not force the trade. Okay, so you have a good point, FB, but at the same time, let's make our life simple and easy, guys. Okay, and if a stock gives you what you need, you take it. If it doesn't, you go for another stock, unless you were to be in that strange, unique situation where you have no opportunities at all. Okay, good. So let's continue then. So what I'm going to do is go back to the option chain. We're going to be focusing on April 26. That would be ideal. Okay, I'm going to have to wait 4 minutes, by the way. I thought it was already market open time. We still got 4 minutes. You know that the 10, 20 minutes before the market opens, the option chain will be reset. That's why all the values are 0. Okay, so I'm going to have to wait 4 minutes before I am able to do anything. But in any case, we're going to be pointing at April 26 with EA, I believe we said E and A. Okay, with EA, I believe I said, yes, May 7. So technically, you can actually use May 3 as well. We can use April 26 or May 3 because none of those two dates surpass the earnings report date, which is May 7. Okay, so we can use both. But again, especially since we have a 3-day weekend in between, I would so love to use April 26. And if it doesn't work, it doesn't work. It's still an advantage to have a 3-day weekend to use May 3. But it would be a massive advantage to use April 26 if we find trades that meet our rules. Okay, so we'll be researching for that. Okay, that's my goal today, to find a few trades to take advantage of the 3-day weekend. Okay. Anyway, so yeah, so we have 2 minutes and a half to wait before we get there. So in the meantime, what I'll do is take a look at CI. Okay, so we said no WDC. I'll look at CI to see what we have there. Well, with CI, I got a little bit of an issue with the setup, if you wish. I got no green below, only one green. And therefore that would not qualify as a non-directional trade, even though the scanner thought so. The UFOs are telling us not the case. So what about BG, I should say. So with BGE, I'm not too happy either, because we got green, but the red is way further away. So it's not like we're in a situation like in the middle of the UFOs. We're more, towards the downside. Okay, so I'll do this again once the market opens, in case we have a gap up. It's looking like it's going to open 0.76% up, but I would like to see that. With AMGN, we may have something. With AMGN, we may have something, because it's looking like AMGN may open up with two green UFOs below and 2 red UFOs above. So hey, AMGN is another stock that I would like to explore. Okay, based on the setup with the UFOs. and AGN. And by the way, we're gonna have to be careful with all those stocks, AGN, BJ, EA, AMGN, because they are not super massively liquid, none of them, okay? But it may be okay. And Allergan, also well located in the middle of multiple red UFOs below, above, and multiple green UFOs below. 50 plus is the probability. You know, it's looking quite okay. Okay, so really the stock I like the least for a pure non-directional trade, to be honest, is the BG. Okay, so probably we'll simply skip it. Okay, but let's go ahead and take a look at our EA trade because the market just opened. So now we should have data on our option chain, and therefore I would like to take a look at the data to see if we got premium enough to be able to do those trades. So what happened with the 83s with April 26? Well, we have 19. One of the rules that we learned is that we would never accept less than 25, even though our real goal is 35 or more. So obviously the 83 is pointing at 19. So it seems that if I was to do EA, May 3 would be the one I need to use, even though with May 3 I don't have 83, I need to go for 80. So this is kind of like a funny one, where it's like you wish to have the 83 on May because it would work, but we don't have it, so we cannot create it. So we're gonna have to skip EA. Okay, so then let's take a look at AMGN. Max, any rule or method to take the UFOs more reliable than others? I'm not fully sure what you mean. You mean when a UFO is giving you a low probability to try to increase the probability, you mean, or combine other things with the UFOs to make it better? Would you mind to clarify this so I give you the right answer? Yeah, so back to AMGN here, and we were saying that we may have a setup here with red UFOs above and green UFOs below. So 52.58 is regular time, regular market hours. Let's look at pre and post. So it's 52.58, and that's 48. So we're gonna ignore pre and post, not relevant for AMGN. And what we're gonna do is draw a line below those UFOs. Okay, so first expectation would be not to reach below the bottom green UFO anytime soon, and the second one would be not to reach above the red UFOs anytime soon. And to be honest, if we would do it like that, we may be a little imbalanced. So maybe, not sure yet, I'll know when I look at the option chain. But maybe we need to do it like that, 188, 176, meaning that the expectation is that the stock will remain doing whatever it's doing, okay, and stay between those two lines. Okay, that would be expectation number one. A better trade would be to allow for the stock to breathe, not only to here, but all the way to here. Okay, and in any case, stay, between those UFOs all the way to expression. Obviously, this point on the chart is further away than this point on the chart, which is the second blue line, the 188, and therefore 190 would be higher probability. But if we do 190, because it's further away, I have a concern in the back of my mind, which is that we may not get paid enough. Okay, we may not get paid enough. So let's take a look at the option chain. I want to refresh my memory as well when it comes to earning dates for AMGN. This is hilarious. I really don't understand why this happened in this website. Okay, there are times I type it and it goes, and there are times it doesn't. April 30. Okay, so April 30 means that we cannot use May 3. We need to focus on April 26 as a maximum, which, by the way, is what I would love to do. So that's not a problem to me as long as we are paid enough. So let's see if we do the 176, which is 175, let's see how much we get paid. And notice how the 175 is paying 1.06. And that's good because, okay, we are looking for a minimum 25, ideally 35, and we got 1.06. That's much more. So what if I do 190? Well, if I do 190, I actually get 41. So I can do 192. Okay, I can do 190 as well. So so let's do it. Let's plan it. We may have a valid iron condor to be executed on AMGN. So everybody be ready to follow the plan. And most importantly, if you like the trade, everybody be ready to practice it. Okay, and like Brian or supply and demand trader are doing. And again, I don't mean to put you in an uncomfortable situation if you never traded those condors before. But you need to keep in mind as well that you have something called paper money accounts, demo accounts, and I think it would be great if you were to let's say you were not comfortable because you never traded non-directional before. It would still be good idea. It would still be a good idea that you execute it with paper money, so you get to see how it works over the weekend, and that will give you a greater level of understanding. Okay, so I will propose that we do a little bit of teamwork here, and therefore I'm going to give you the parameters of the trade so you can replicate that on your computer, no matter the platform you use. You may be trading with Thinkorswim, IB, TradeStation, you name it. So go ahead and follow me. Okay, so what we're gonna do is we're gonna sell calls and buy calls above the red UFOs, and we're gonna sell puts and buy puts below the green UFOs using April 26 expiration date. That's the plan. Okay, and to make it a little more visual, I'm gonna change color to a darker blue. And the call that we're gonna sell is the 190, and therefore the one we're gonna buy, I believe, would need to be the 192.5, I believe. So we have 190, 192.5. So that would be the plan. And then for the bottom part of the condor, we're gonna be selling the 175, correct? Yes, because we don't have 76. So we'll do 75, and then we'll do 72.5. So we're gonna be selling the 175 put and then buying the 172.5 put below. And this initially looks like it's gonna be well balanced, even though, as you will see in a minute, unless I'm wrong, it's not gonna be balanced, and we're gonna have to do a little adjustment to balance it better. Okay, so you will see that in a sec. So we said earnings are on April 30, and that was April 30 after market hours. So April 30 after the market closes. Okay, after market. Good. So let's insert our iron condor. Okay, right click, sell, analyze, sell, and I'm gonna select iron condor. Again, in options trading, guys, many times we have all those fancy names that for the ones of you here today that are not experienced with options trading, many times all those names sound, let's face it, quite intimidating. So please make sure you don't fall into being intimidated, because as you will see, this is very simple. What we're doing here is selling a call, buying a call, and on the other side, we're selling a put and buying a put. So if you were to break it into two pieces, it's the above, the call side is the mirror image of the put side. So it's kind of like you're doing the same trade twice, one time with calls, one time with puts. Okay, now you call it iron condor and it sounds magic. Okay, but the reality is that it's not that magic. It's actually quite simple. Okay, so we're gonna enter this trade here in the bottom part of my screen. So I am using, as you can see, April 26 expiration date. When it comes to the puts, we said we're gonna buy the 172.5 and sell the 175. So these are things that I need to select manually. Of course, the computer is very nice, but computer doesn't know how I want to build the condor, so I need to do it myself manually. And I just changed the calls to 190, 192.5, and I changed the puts to 175, 172.5. Now, to understand better how balanced or not balanced that condor is, it would be good to also adjust in a more precise fashion the prices at which those UFOs are, which is 190.13 above 190.13, that would be above, and 176.27. Oh, I'm going to have a much better understanding of what I have in my hands. And to be honest, what I have in my hands is better than what I thought. I thought it was not too well balanced, but it happens to actually, yeah, the value is just updated, and yes, actually I was actually right. So notice how if you were to be stopped out above, which we'll talk about that in a minute, by the way, because you could trade the condor with or without stops. So I want to give you more insights into that. Take care, Orlando. See you next time. So if you were to execute a condor with stops, the upper part when you reach 190.13 would give you a loss of $98, where the bottom part when you reach 176.27 would give you a loss of less, a smaller monetary loss. And the reason why is because we are closer to the bottom part of the UFOs than the upper part of the UFOs. In other words, when looking at the chart, in a perfect world, you will look at the midpoint, okay, and let's say the midpoint is somewhere here. Well, then the current price of the stock would be there, but it's not the case. The current price of the stock is below the midpoint, as you can see, and therefore we are closer to the bottom part of the range versus how far we are to the upper part of the range. And because of that, if price was to travel towards 190.13, price has been traveling for longer against you, if you wish, and therefore the size of the loss above is greater than the size of the loss below. So we're going to have to work on a little bit of an adjustment here, which is not going to be easy to have this amazingly perfectly adjusted because as you have seen in the option chain, the strike price difference is $2.5 at a time. But I believe that if I was to move the 172.5, I was to move it to 170, what I would basically be doing is to adding a little more pain in the bottom side, and ideally that would balance out the trade. Now I got 99 below, 97 below, and I have 120 above. So notice how the below part is still less painful than the upper part, but now it's much closer than what it was before. Actually, notice how now it's kind of switching back and forth, so as you can see, and this, again, the fact that we are having those differences showing up is actually a sign that tells us that we're going to have to be careful entering this trade, because it means that some of the options we have selected are not liquid, and therefore the bid and the ask price of those options is varying greatly because of lack of liquidity, and that may hurt us when we enter the trade. Okay, so we're gonna have to be very, very demanding. I mean, you can see it here very quickly, where you see the bid price of the condor is 132, where the ask price is 42. So notice the massive spread if you were to execute the condor at market price. Okay, so we're not gonna do that. We're gonna be shaving this spread very, very heavily, going for that mid. Okay, going for that midpoint big time. Okay, and certainly with that sort of a spread, I would advise you guys, I would like to put on the table that probably the best way to execute this condor is without the use of stops. Because if you use a stop located at 190.13 or located at 176.27, and the stock, instead of remaining between UFOs, the stock just keeps going and going, and you get stopped out in this region. And when you get out of the trade, you have to suffer the spread I just showed you, right? Then you just completely got killed. So this condor, given the fact that AMGN is not the most liquid stock in the US market, even though we are having a nice level of premium at the moment and therefore potentially a good trade, but even though AMGN is not the most liquid stock in the market, so we're going to have to be careful, and my suggestion would be to not to use stops when executing this Iron Condor. Okay, and for the ones of you that never traded options before, it doesn't mean that you're gonna get killed or anything like that. It doesn't mean that. What it means is that the maximum you would have at risk is the distance between strikes. From 0 to 5 is $5. From 0 to 2.5 is $2.5. So the maximum risk is 5 minus the credit collected. Okay, so 5 times 100 is $500. If the credit collected is 91, so you would have a risk of 500 minus 91, which is, let's call it $410 of risk. Okay, so your risk is limited even if you don't use stops. which is cool. Okay, but at the same time, you could limit it more with stops, but in this case, it would not be prudent because of the lack of liquidity on this option. Okay, so we're gonna have to be mindful of that and take it easy and be crazy demanding with the midpoint. Notice earlier was like 80, 90, now it's 70. So don't go for 70, don't go for 60, don't go for 52. You're gonna have to go. You may even go for $1, and if you don't get filled, you don't get filled. But if you get filled, you know you got a very good price, which you may, because these spreads will keep varying during the whole day because AMGN is not that liquid. And this has a bad side, but it also has a little bit of a good side in the sense of if you are patient, you may get a better price than what you thought. So anyway, now before we finalize and validate this trade, there is one extra confirmation I need to make, especially in the bottom part. Because you know that when we do credit spreads, we have a rule that says you need to get at least 15% of the difference between strikes. Okay, that's the minimum is $5, right? We just look at the difference between 175 and 170. And the rule says that you need to collect a minimum of 15% of 5 for this trade to be valid. That is 75 cents times 100. That is $75. Right? So what does that tell you? Well, coming back to what we were doing here, okay, that 1.07 is certainly valid because it's more than 75. We just calculated you need a minimum of 75 cents. So 1.01 would certainly be valid, and therefore I am now validating and stating that this condor meets our rules. And if you feel like executing it, you decide, but just go for it. Does that make sense? Because it does meet our rules. But notice how that value is fluctuating so much. Earlier it was like 59, I think, or 60 something. Now it's double, right? So that's why if you place this order, just take it easy, be patient, and if you don't get filled, you don't get filled. But if you get filled, you have to make sure it's a minimum of 75 cents, okay? But I would just go ahead and go for at least $1 or something like that. So you would do something like this, okay? And you will now place the order. I would make it a day order. Okay, a day order, because really, if you don't get filled today, then you will need to reassess the whole trade on Monday. So because of the weekend. So place order. Yes. Confirmation. Yes. And my order is in. I don't expect to be filled at the moment, but my order is received. And now the platform will be waiting for me to get $1 of credit, and whenever that's the case, I would then get filled. Friends, we got trade number 1, so you can take a screenshot. That's what I meant. Okay, so this would be the plan that okay, so I believe we are good with AMGN. If any of you is entering that trade, I would love to know, guys. Okay, so I would love if you could report it back to me in the comments box, out of being able to track a little more closely what you guys are doing. That we are gonna be collecting premium. Okay, good job, Brian. We're gonna be collecting premium, but in this case we have a market condition which is different in the sense that we have a strong bias towards certain direction. So the neutral short, okay, are normally markets in a downtrend, identified by the scanner, TradeStation scanner, even though the downtrend is not necessarily a strong downtrend like when we do directional trades. Okay, but still it's a downtrend, and the options are highly priced. Where when we do the directional short trades, then the options are low price instead of high price. Okay, because for directional you buy options is debit, for neutral you sell options is credit. Okay, so you want them to be high priced. So what I'm going to do here, I'm just going to try to be a little more quick in my plan, just because I gave you quite a lot of detail in the first examples. So this should allow me to run a little faster also, because we got 10 minutes left in the session. So I need to get moving here. So what I'm going to do in order to be a little more efficient with my time is just to focus on the symbols that I know out of experience that may have some decent liquidity and stuff. So Expedia has expiration dates. Let me rephrase that. Expedia has the earnings report scheduled to be May 2nd. May 2nd is certainly beyond April 26th. So if we were to find good red UFOs, we would be able to plan on a non-directional trade doing a bear call spread. And here you can see that we have a red UFO right here. 5146 are the stats with regular session. Okay, you guys can see that, right? Remember earlier my comments with WDC, right? You see that, right? How different stocks are traded differently by different institutions. We gotta respect that. The stock market, you always need to keep that in mind. I'm just adding a comment here. Stock market is a very fragile instrument. It's not like when you trade crude oil or gold. Those markets are something specific, right? It's crude oil, it's gold, is the euro, right? Those markets are specific. When you trade stocks, it's just a little tiny portion of a small market. The stock market is 3 times smaller than futures. So now you deal with one stock, and that's going to be quite fragile, okay? So you need, without looking at the stats from the UFOs, you would be a little blind, hoping for some methodology to work without really knowing if those institutions are keeping the orders in or they're not. Okay, is that making sense? So that's an important step for you to realize, and that's why I have the stats on all the time in here. So notice how with the pre and post market you can see that the performance is less, which let us know and prove to us that institutions tend to cancel the orders. Okay, and basically we are left with this particular collection of UFOs. Okay, so now you may say, hey, what about doing another encounter, selling calls above the red and selling puts below the green? Well, you could certainly do that, but the problem I have here is that the filter has the word short because the filter is looking for let's call it pushes to the downside, and pushes to the downside means downtrends. Okay, trends work by giving us collections of impulse / correction, impulsing, correcting. So the scanner is suggesting, and probably that's the one, that this was a very big impulse to the downside, such a strong lead to the downside. This could be a downtrend, and because of that, the scanner is telling us you may be neutral in this one, but better be short, right? Or better be neutral short, meaning that your bias should be to the downside. So here, if we were to do a condor, you would want to do half. Half means that you would want to buy a call and sell a call without selling the put and buying the put. So you would do half of the condor instead of the full condor. And if you do half of the condor, that is what in the world of trading options is known as do a credit spread. To be more precise, do a bear call spread where you would be selling like the 128 and then buying the 129 above or something like that. Okay, now assuming that we have premium enough. So let's take a look at that. Okay, we have Expedia here, looking at April 26, looking at the 128, we get 35. Okay, we get 35. 35, that is the minimum that we accept. Okay, and for a $1 difference, we need 15% of $1, which is 15 cents. So if I sell the 128, I get paid 25. I buy the 129, I pay 20. So I actually get 15 cents. So guys, this spread will work. Okay, no need to simulate or anything. I can just see it right here. Doing the 129 and 128 will work using April 26, 2019. That spread would be valid even though it's not the best spread in the world. And I'm saying it's not the best spread in the world because I would collect the minimum required based on my rules, which is 15 cents. It's not amazing, okay? But it's valid. So I would say that this one, I personally don't like to execute a trade where, I don't have a little bit of wiggle room in my rules. When it comes to premium and stuff like that, I always like to have a little extra, right? It gives you a little bit of a buffer, a little bit of an edge. So I would like to do that better. But for practice purposes, okay, I would say that one is ideal for you to practice. And you could certainly execute with real capital as well. But I would say for practice purposes, this one is better given the fact that the premium collected is very, very, very limited. Okay, so let me see if we have any other stock here that would be a good candidate. So American Express could be another guy. AXP, I mean, Expedia is much liquid than American Express, if I'm not mistaken. But if earning dates are good, and they're not. Earnings are happening today. Actually, today before the market opens, earnings took place. So we cannot use American Express AXP. Okay, so then what I'm going to do before we conclude the session is look at the neutral longs. And the one that would catch my attention immediately is Chipotle Mexican Group. Oh, Mexican Grill. Sorry for that. The reason why is because that stock is a highly priced stock. And being a highly priced stock, you get plenty of premium. Okay, but of course, we cannot get that excited without looking at the earnings date, because maybe those options are inflated for a reason. And they are. Earnings is on the 24th, so we cannot do CMG. What about British Petroleum? April 30, that would work. So we just need to use a little patience while the data is being loaded. And we'll go for it. PD, almost there. Should be quick. Here we go. So interesting. We got 42.55. By the way, the one reason why you will see very often with stocks and ETFs that are related to commodities, you will see values of performance stats that are not too high, and the reason why is because those products are closely related to the commodity. In this case, oil. British Petroleum is obviously oil, and commodities trade 24 hours a day. So what I was saying earlier when it comes to canceling orders is happening really, really often on those stocks. Okay, so to trade those stocks properly, you certainly would want to overlay the oil chart, on top of the stock to have a much better understanding of what may happen to that particular stock. Okay, so no BP. What about NEM? There's a little bit of a low price stock, but let me see what we have. This is a commodity stock as well, so Newmont Gold Corporation. So we may have a low stat, much better than the other ones. Yeah, but that one is gonna be tough because the closer we need to go is 31, and being this a $31 stock, and by the way, I didn't check earnings, NEM. NEM. So that stock reports on the 25. So CTRP. FOS 47.37. I'm not super delighted with performance stats for that stock. Fragile stock. This is a fragile stock. What about pre-market and post-market? Even more fragile. So no trade. Okay, no trade. So guys, when it comes to the non-directional trades, really the best trade that we could have taken is the one with AMGN. That's the one that we have planned earlier. I see Brian, you got in. It seems that only you guys. If you got in with a paper money account, I would still like to know, guys. Okay, and by the way, please don't feel any sort of kind of discomfort just because I am suggesting that you execute the trade. That's obviously your decision. Okay, but at the same time, that's really how you're gonna learn. Okay, so that's why I'm asking. Okay, so if you are executing with paper money, I still like to know because I wanna kind of track your progress, and that's why this is important. Okay, so what do we have here? So we have KR. Notice how for the shorts I switched to a daily time frame. You can see the. Okay, I'm just gonna click on all those symbols so the download starts for every stock on the 60. So behind the scenes the download will start. And that way I'll save a little bit of time when I start looking at the other trades. So KR. Here we go. I got my KR. Yeah. So all the downloads took place already. That's great. I just saved a little bit of time for myself. So yeah. So We are actually entering a red UFO as we speak on KR in the context of a downtrend. Okay, in the context of a downtrend where we have room to move all the way to 2411. So I'm a little concerned about this. Let me show you. I'm a little concerned about the fact that we have this huge, massively open gap above price, you know, and the fact that the performance stats, well, actually they're okay in the 60-minute time frame. So yeah, I mean, it's time to take this trade if you want to take this trade to the short side. So we need to buy a put here. Again, I'm just concerned with a huge gap that is open, you know, right here. And the reason why I'm concerned is because when a gap is open, normally will tend to get filled at some point. Now, may not happen anytime soon because we're in a downtrend. You know, again, impulse correction, and normally after you have an impulse, so this could certainly be the time where the next impulse is going to happen, bringing you to your next target. Okay, now talking about impulse correction and all those things, okay, we'll need to put more time into how to set targets. But if this is the impulse and this is the correction, and you take profits here, it doesn't really mean that you are really enjoying and exploiting the trend. So I'm going to plan to take profits at the bottom one. I think that would be a much more reasonable trade from a point of view of trend and risk and reward and everything. So KR, if we were to take this trade, we are looking at a stock with earnings on earnings are located on June 20. Okay, June 20, very good. Let me calculate the TTT. And again, if you don't know what's the TTT, that means time to target, and you will need to watch those Sunday sessions, so we speak all the same language. So from current price, 25.75 to the ultimate target, which is 22.02, we're talking about 373. If I take this figure and I divide it by the ATR, which is 49 cents, that would give me 7, and 7 times 7, that's 52 days. So 52 days is the TTT. We would expect it would take up to 52 days to get to the target. And if we were to use the June expiration date, that would bring us KR June 20. We don't have June 20, so we will need to be using July 19, and that will give us 92 days, which is more than 50, so we are fine. If we were to do this trade this way, you would be doing a bear put spread. That's directional, guys. Everybody make sure you understand. You would be buying the a put, and then you would be selling a put below your target. That's how you would do the spread. Okay, and the put you would buy, you would just calculate where's the midpoint between 25.80 and 22.02. The midpoint is 24, so you would be buying the 24 put. Okay, and then you would be selling the 22. Okay, now we have rules for that. Okay, we have rules. So let me write a few things here. So first, expiration date, we said it's going to be July 19. Okay, which is 92 days. Okay, that's the expiration date. And let me bring my notes. So we have rules. We said where are you? Let me see if I find it. Yes. So when you do the debit spreads and you do the bear put spread, you buy a put and you sell a put, and the put you sell is beyond the target. Okay, beyond the target. We will need to get deeper. I remember saying this in a prior session. We'll need to get a little deeper into delta and Greek calculations. Okay, but basically, if you buy the 74, you're gonna pay 77, and if you sell the 22 again, you're gonna receive 34. So this trade end up being so cheap. Okay, and the most you can lose is what you pay. So that's a good beginning. Okay, but let me check. Wait a minute, guys. Here we go. Now, so let me add format columns. I would like to add delta values here. So if I do the 24, it has a negative 28 delta. And if I do the 22, it has a negative 14. So negative 14 basically gets rid of half of my delta. That's a little too much. Okay, so I would go for the 21 instead of the 22. And that would make the trade to be a little better. Okay, so let me simulate that just to give you the values. And we will call it a day. I am analyzing buying a vertical made of buying the 24 and selling the 21. Okay, and as you can see, doing that would produce a trade that cost you $57 per contract, per put, per spread. Okay, and if you're right, this trade would be likely to be nicely profitable if you get to your 22.02, which is your final target. So this trade is likely to produce $94. In other words, this trade is likely to go from $57 to $155 per spread. In other words, it's close to a 300% return on this trade, in case you're right. If you're wrong, of course, you're gonna lose what you pay, which is 58 cents times 100. That's $58 per spread. And of course, you would decide how many spreads you want depending on your risk appetite. You may do 1 spread, 2 spreads, 5 spreads. The quantity of spreads to be executed depend on your risk management rules. Okay. So anyway, I'm just gonna enter it. I'm gonna enter it here for myself, and we will call it a day. So market price, place order. Yes. So the trade is being sent. You can see in the bottom it says sending. Okay, it's taking a long time. Maybe my connection is not too smooth with the trade server. Okay, well, this should be way faster, and maybe what's happening is that since I have placed the order in a simulated account, sometimes the execution will not happen until after. In real market conditions, I would be filled already. So positions, yeah, I have some trades running here from other times, but this order has not even entered my order thing. Still retry sending. Okay, got it. So something's happening with my connection, so I guess it's a little technology problem on my side. I just need to wait, and I'll get filled in hopefully a few seconds, maybe a few minutes. Okay, but anyway, yeah, so let's conclude our session today, guys. And today I would like to conclude the session a little differently. It's just that I never show myself, guys. I'm always, doing the trading here, guys, and I just wanted to say hi to everybody, right? I'm here doing the session and joining you and having fun, but not necessarily seeing you, and you guys not necessarily seeing me. So wanted to have a quick hello to everybody, guys, and you get to see the face a little bit, so you understand better the origin of the voice. Okay, even though some of you I had the pleasure to meet you in the past. Okay, so which is good. Anyway, my friends, keep up the good work, everybody. I'm super, super happy of running these sessions with you guys. Thank you very much. Thank you very much for the compliments. Yeah. So guys, thank you very much for joining us. Super pleasure as always. We will see you on Sunday. We have a powerful sharpening session. We'll keep doing what we're doing. Yeah, so again, sharpening on Sunday and then back next week into the following sessions, guys. So keep up the good work. Keep sending those questions, those emails. Keep practicing the methodology. And again, discipline, guys. That's the key. So follow the rules. Respect those UFOs, okay? And have fun and be disciplined. Talk soon. Talk on Sunday. Bye-bye, everybody.